Not, I'm the real estate ninja. This channel is really blowing up right now, and I'm bringing so much more news than just real estate news. We're going to be talking about Citigroup layoffs right now, Project Bora, and we are going to also talk about other layoffs. Let's start with the other layoffs. This story is about a week old, but the Bora story is right now. But we want to get some people on. We're going to start with this one story from CNBC. Big banks are quietly cutting thousands of employees and more layoffs are coming. I asked earlier if you could type 1 if you think banks are in serious trouble right now, type 2 if you don't. The reason why is I want your input into these stories because so many people do not understand that the economy is falling apart. Bidenomics did not work. Jeff Borgen is asleep at the wheel, and we are in serious trouble. Now, when I say it sort of like with a smile, it's because it's not doom and gloom. It is your greatest opportunity in life to level up if you'll be prepared for it. Most crashes happen because most people are caught unaware, but not this time. We are not going to be caught unaware. It says right here, the largest American banks have quietly been laying off workers all year, and some of the deepest cuts are yet to come. I truly believe that. Even as the economy has surprised forecasters with its resilience, lenders have cut headcount or announced plans to do so, with the key exception being JP Morgan Chase, which is the biggest and most profitable U.S. bank. Pressured by the impact. Now, let me stop there. When you start seeing JP Morgan start laying people off, and now they already have. They actually went through a small round of layoffs in their international banking business. When you start seeing layoffs on JP Morgan in this country, you got problems. And I think those are coming. Why? Because we just did a story on how Jamie Dimon, for the first time ever, is selling his JP Morgan stock. Not all of it, but it's a big tell right there, okay? We could go back to 2006, 2007, and look at all kinds of CEOs that started selling stock prior to bad news coming out, okay? So we're getting really close. It says here, pressured by the impact of higher interest rates on the mortgage business, Wall Street deal making and funding costs, the next 5 largest U.S. banks have cut a combined 20,000 positions so far this year, according to company filings. The moves come after a 2-year hiring boom during the COVID pandemic, fueled by a surge in Wall Street activity. That subsided after the Federal Reserve began raising interest rates last year to cool an overheated economy, and banks found themselves suddenly overstaffed for an environment in which fewer customers sought out mortgages and fewer corporations issued debt or bought competitors. Okay, it says here banks are cutting costs where they can because there are really uncertain next year. Job losses in the financial industry could pressure the broader U.S. labor market in 2024. Faced with rising defaults on corporate and consumer loans, lenders are poised to make deeper cuts next year. They also went on to say they need to find levers to keep earnings from falling further and to free up money for provisions as more loans go bad. Look, the fact of the matter is record high credit card defaults, record high auto loan defaults, and soon coming to a news article near you is going to be record high student loan defaults. Now, let's get into the Citibank news because I think this is very important. Also, if you don't mind doing something, this is the Real Estate Ninja channel. This is not the Economic Ninja channel. This channel has been blowing up lately. I'm bringing totally different news onto this channel, and it does not only revolve around real estate. If you would consider subscribing, I would appreciate it. All right, here we go. So out of CNBC, this story just came out 50 minutes ago. It's entitled Citigroup Considers Deep Job Cuts for CEO Jane Fraser's Overhaul Called Project Bora. If you're not ready for this crash, I don't know. I mean, all of this information is just smacking people in the face, just smacking. I know, we all have family and friends that don't listen very well, but you're not going to be able to, they're not going to be able to turn around and say, oh, I wasn't warned. This is all over mainstream now. The banking industry is collapsing, and one evidence, just absolute 100% blinding silver light in your face is layoffs, all right? Says here, when Citigroup CEO Jane Fraser announced in September that her sweeping corporate overhaul would result in an undisclosed number of layoffs. Remember, they do that because they don't want you to know the truth and everybody flee. They've got to keep the company together. So they say, we're going to lay people off, but not everyone. Don't worry. It's probably not you, or maybe it is. I don't know. And they don't want you to run. They don't want you to quit. They want to lay off the people they want to lay off. That's why they do it all nice and fancy like that. It says here, a jolt of fear ran through many of the bank's 240,000 souls. And it's important to say the word souls because these are hardworking individuals, people that have went to school, studied, worked their butts off to get into the positions they are, only to find out that their job is not as secure as they thought. This is exactly what happened to the employees at Lehman Brothers, the employees at Washington Mutual, so many people. While the entire time, the C-suite execs, they get other jobs somewhere else, running other banks into the ground. You can't make this stuff up. We've already had one other bank go down where most of the executive staff were executives from Lehman Brothers. So it's wash, rinse, repeat. But this time is going to be much worse, okay? That I can guarantee you. It says here, we'll be saying goodbye to some very talented and hardworking colleagues, she warned in a memo. I'm sure she's not bummed because her pay is probably going to go up. Employees' concerns are justified. Managers and consultants working on Fraser's reorganization, known internally by its code name Project Bora, have discussed job cuts of at least 10% in several major businesses. Don't you love the word at least? At least, that means it's more than that. It's just a nice way of putting it, making it low. According to people with knowledge of the process, the talks are early and numbers may shift in coming weeks. Weird. It's going to get worse. Fraser is under mounting pressure to fix Citigroup. Just fix it, Fraser. It's not like you guys borrowed way too much money and made stupid bets and now all of a sudden you got to pay for it. Just fix it. A global bank so difficult to manage that its challenges consumed 3 predecessors dating back to 2007, already a laggard in every metric that matters to investors. The bank has fallen further behind rivals since Fraser took over in early 2021. It trades at a price to tangible book value ratio of 0.49, which is less than half the average of its US peers, and 1/3 the valuation of top performers, including JP Morgan Chase. I wonder how many people are shorting this baby right now. James Shanahan goes on to say, the only thing she could do at this point is really substantial headcount reduction. That's pretty bad. It's like, yeah, we're pretty much screwed. All you got to do is just fire everybody and then you'll save a bunch of money. We're like, well, who's going to do all the work? I don't know, but we're saving money. That's where we're at right now in the banking crisis. Woo! Let me ask you this. I love this because it just causes everything to freak out. Do your family and friends have any clue what's going on? I'm going to be honest with you, mine don't. I'm the crazy one in the family. And that's the thing. Remember, all of you that are in this chat room right now is what, 1,000 people, over 1,000 people. Everybody, I'll bet you, if I said type 3 if your family and friends think you're nuts or they have no concept what's going on, everybody would type 3, right? And the point being is that that's a lot of people. That's a lot of family and friends. And so that's what makes crashes. And just so you know, during the Great Depression, unemployment was only at 24.9%. It wasn't even 25%. It was right there below. I'm sure they cooked the books there too. But my point being is that there was still 75% of the population that was employed. And that caused the Great Depression. You actually don't need that many people to suffer. And I hope this is waking some people up. You actually don't need that many high of unemployment to cause a depression or a Great Recession, okay? So right now we are seeing massive amounts of layoffs. They are saying, hey, this is all you got left. The banking sector is so screwed. I know that Citigroup is one of the worst, if not the worst, in America, but they're just gonna lay people off, just fire people. And all those people, remember that work for Citigroup, my heart goes out to them, but I'm trying to warn people as much as I can, and I'm sure you are too. They all have mortgages, they have car payments, they've got student loans they got to pay, and they're going to stop paying those, and it's going to exacerbate the problem. In 2024, you're going to see an amazing crash. Now, again, I'm sorry, I can't be super bummed because the sun will come out tomorrow. We're going to go through this crash, and hopefully type 4 if you're going to be buying all these deals too. I'm going to be picking up assets for pennies on the dollar because people didn't think ahead. It says here, James Shanahan, Edward Jones analyst, right? Said in an interview, he goes on, she needs to do something big, and I think there's a good chance it'll be bigger and more painful for Citi employees than they expect. I completely agree. Let's look at the chart of Citigroup. Look at this bad boy. Look at that. Just, would you look at that? Would you just look at it? That's 2000 of the run up, and then 2009 and whack. And then look, it's just been treading. I don't even know where I'm pointing. It's just been treading ground. It's not good. Man, if Fraser decides to part with 10% or more of her workforce, it would be one of the Wall Street's deepest rounds of dismissals in years. So that's going to really set the stage for some other banks, because all these other banks are like, crap, we got too many employees too. We're not bringing in a lot of money. And so they're waiting for her to do this. And when they do it, they're going to be watching how the stock reacts, how Wall Street reacts, how Hometown USA reacts. And if it's not that bad, they're going to start laying off in droves too. Burdened by regulatory demand that hastened the retirement of her predecessor, Mike Corbat, Citigroup's expenses and headcount have ballooned under Fraser. While competitors have been cutting jobs this year, Citigroup staff levels remained at 240,000. That leaves Citigroup with one of the biggest workforces of any American bank, except the larger and far more profitable JP Morgan. So this is going to be a deep cut. It's going to cut deep. An update on Fraser plan and financial impact will come in January along with fourth quarter earnings. You see, they've got to wait for all of 2023 to finish. They don't want people knowing, or before Christmas, that they're laying all these people off. It would be bad for the stock. It would be bad for Wall Street. It would be bad for the government, because, you know, Jeff Morgan, he's got a plan on getting you out of inflation. No, it's a bad plan. The stakes, it says, are high for America's third largest bank by assets. That's because after decades of stock underperformance, missed targets, and shifting goalposts, Fraser is taking steps analysts have long called for. Failure could mean renewed calls to unlock value by taking even more drastic actions like dismantling the company. Now, we have already experienced quite a seismic shift in the banking industry in 2023. We already experienced a big takedown of mid-sized banks, and 2024 is not going to disappoint you if you're expecting much bigger crash. Dismantling of a bank is exactly the name of the game, because what they're going to do is they're going to take the most profitable and they're going to sell them off to the bigger banks, and then the crap is going to be left for the FDIC or for the Fed to deal with, and more than likely it's going to end up in our pension funds. I'm not joking. This is just how it happens. Fraser has vowed to boost Citigroup's returns to at least 11% in the next few years. Isn't that really cool? I just love a CEO to just tell the truth, like, nah, we're screwed. Like, I tried. This is, no. But it's, of course, it's like, don't fire me. I'm going to do it. I'm going to do it. Not like last year or the year before, but I'm going to do it next year. I'm going to crush it. That's pretty cool. I wonder if they learned that in CEO school. To get close, Citigroup needs to increase revenue, use its balance sheet more effectively, and cut costs. But revenue growth may be hard to achieve as the U.S. economy slows, leaving expense cuts the biggest lever to pull, according to analysts. Not one investor I've spoken to thinks they'll get to that return target in 25 or 26. And this came from Mike Mayo. How'd you like that name? My name's Mayo. Of Wells Fargo. I started a clinic. All right, sorry. Said in an interview, if they can't generate returns above their cost of capital, which is typically around 10%, they have no right to stay in business. Well, I completely agree with you, Mike Mayo. Fraser put, oh, this has got to be a joke. All right, his name is spelled T-I-T-I. I'll say T.T. Cole. T.T. Cole's Citigroup's head of legacy, man, I can't make this crap up, of legacy. All right, look, we're just going to get serious now. I've been warning about this for like 3.5 years. I don't know what to tell you. Crap's going bad and it's going bad fast. If you agree with that, type 8. If you want to go and crush it this next year, type 9. And also do me a favor and tell me how you're going to crush it. Tell me your goals next year. I love hearing your goals. I love seeing you put them in print and say them out loud, because you guys know there's no way to excellence with, I mean, you can't hit the sun if you don't shoot for the moon. It's one of those things. You got to shoot far, okay? All right, that's it. The Economic Ninja is out.